Some amazing names in the fund market. If I look at the collective experience of my fellow panelists, we are looking at experience of over 150 man-years. We're looking at over 5,000 companies they have looked and invested close to $1 billion in those companies. So we are seriously looking at a very, very smart, intelligent capital and ideas they have. So with that, let me just explain a little bit about, and yes, there are two very important announcements which I will share after the panel. Those who will wait till the end of the panel, those who will hold their hunger, will have some good takeaway that might leave them richer as well and also more informed if you hold on to your hunger pangs for a little bit longer. And I apologize to all my fellow panelists. This is the dynamic nature of our industry. Expect the unexpected and be ready to know whether, whatever, brave the delays. So once more, apologies on behalf of only me and me. Startup funding. We are here today to find out why the startup funding has not really taken off in agri and food as it should, because 68% of Indians are involved in agri and food. It is the lifeblood of Indian economy or Indian population, but we have 115 or 120 unicorns which are more than $1 billion in valuation, but we have probably, other than leaving aside the grocery or deliveries, not even a single unicorn. Why are we suffering from a winter funding, or is it just a lull or a chilly day? Why is it that international investors are shying away from investing in agri-food? Even the domestic investors are not that gung-ho. Where are the new opportunities and ideas where we are looking to invest, and what mistakes a startup should avoid when they go to funding? So with that, I will start with Jinesh from Omnivore. Omnivore has done amazing investments. They were probably pioneers in agri-food investment. So a little bit about your journey and where do you see the bright spots and the mistakes which startups should not commit when they come for funding to you.
Thanks, Sudhakar, and thanks, Globoil, for having me here. As a background, we are a food and agri startup fund. We currently investing from our third fund. We invest into Series A, pre-seed or seed companies. So that is the first institutional check we put in. We've been doing this for last 10, 12 years. I've done some 40, 45 investments. Hopefully got some exits, and hopefully a few of them will soon become unicorns in next year or two. I mean, that's the plan. So look, the question about is that what to start, why agri-tech is not really gone the way it should have been gone, right? I mean, look, agri-tech as an ecosystem globally has started around 10, 12 years ago, right? I mean, biologically we are maybe 15 years behind the VC investments. So expecting us to get unicorns in the first 10, 12 years of a journey is difficult. It's the last 5, 6 years which are more exciting than the first 5, 6 years. And I think it's just a matter of time we'll see unicorns. We'll see a lot of disruptions happening in it. I mean, we are seeing those early signs, especially in the distribution games where large startups are now competing with companies like Bayer, Monsanto's. I mean, in the distribution space, they have the even larger networks than quite a few startups. I mean, we are seeing startups working on doing more value additions, figuring out a way to work with the government, with the startup ecosystem. And fortunately, we are seeing more and more global capital coming. So it's not that we don't have capital coming in, right? I mean, my fund has most of the global investors. I mean, the DFIs, the sovereign funds, we got fund of funds. They're all global investors coming in. It's happening right now, right? I mean, the winter's going to take time because I think for agri-tech, the ecosystem really started after the demonetization, the geo launch, and the COVID event, right? I mean, all those three things are really helping the agri-tech startups to get the momentum. Today we are in the pace. I think I have got Agam on with me on the panel. I think they've been doing a wonderful job, I think, and we are seeing those things. I think from a VC perspective, look, we when we an entrepreneur comes to raise capital, we look for simple things, right? Saying, are we coming with the right set of team? I mean, because team is the most important thing. Are we targeting a right target market or TAM, right? Which we want to work into multi-billion-dollar TAM, and hopefully, do we have a moat in terms of technology or technology? That's what we look, right? If the entrepreneur has all those things, I think there is a fair chance if you would look seriously at the deals and hopefully make investments. But to say yes for a deal is always tough, right? On an average, we see probably around 8 or 9 deals a week, right? That's what within the team we see. And probably we invest like 6 or 7 transactions in a year. So the ability to say yes is always limited, but hopefully there are many investors coming in, and I think you'll see more entrepreneurs getting funded. So that's what I'll put in.
So the TAM, which is total accessible market, is very, very important. And the team, and if you're really solving a large-scale, genuine problem. Shiva, I'll move on to you. The name of Shiva's company is Ankur Capital. They have been a pioneer in investing in deep tech, and especially in those sectors where investors, institutional investors or the funds were shy because they invest in technologies which give maybe return over a long period of time. So something on that journey, and where are you looking at the new ventures, please?
Sure. So just to quickly introduce Ankur, the name Ankur does come from us coming in early in a journey as the company is sprouting out. So we come in at a seed, pre-series A stage, normally first investor that's going into a startup. And the focus for us is in 3 themes: agri, climate, and looking at solutions being built for Indian masses or the global south, as the larger opportunity will be. For us, the focus has been, especially for the last few years, on saying what are the deep science-based innovations and digital models as well, but what are the deep science-based innovations that are coming in these avenues that can revolutionize the industries they're in. So for us, what that has meant is looking at companies that have been riding tailwinds of things like bioinformatics changing. AI is something that we've seen from different elements in the last 6-8 months of how transformation has taken place. But these are winds that have been building up over time, and you can see there's a different set of technology solutions that can now be built that were not possible 3-4 years ago. So for us, as we're taking on a new theme, the question of why now has always been a critical element. When it comes to deep science startups more generally, we're looking across the biotech space, looking at energy-based solutions that can enter new avenues and look at industries and changes very differently based on how climate priorities now seem to be some front and center from a de-risking perspective that a corporate has to manage with as well. So we're looking at a range of those avenues that are honestly taking on the tailwinds that we don't think about day to day as business operators normally, but the Indian government has been investing in BIRAC, which is a biotech initiative for the last 10 plus years now. You have a lot of this capital and innovation that was taking place and has been bubbling under the surface that you're now seeing, similar to what generally in the agtech space as well that Jinesh said. The first 5-6 years, you're building that ecosystem, the entire series of the technologies to come through, and then you suddenly start to reap these non-linear rewards with a lot more talent and a lot more potential coming through. So for us, that's the exciting element that we're spending a lot more time looking at nowadays.
So, ladies and gentlemen, if you have an idea, and it has, you feel it has a long-term potential, and it is deep tech, and so the right person who can invest patient capital is Shiva Kumar. So you have Shankar, you have to find him after the session. With that, I want to move on to Emmanuel. Emmanuel he's investment director of Caspian Fund. They've invested close to 500 to 600 CR in about 100 companies. So his model is a bit different. They come in the companies as mezzanine debt, how he invests, and in what kind of solutions he's looking at, he's going to tell us. And debt fund is slightly different than the other investment. Emmanuel, please, over to you.
Thank you, Sudhakar. So Caspian is more famously known for the debt funding that it does. So companies that get funded with equity require working capital to grow their business, so to scale it up. And conventional lenders, they cannot meet the requirements of a typical bank or a lending institution. That is where we come in and we help businesses of this nature grow. So that is one side of business we do. We've done close to around 50 agri startups in the debt space. Around 30 are active. Some of them have exited, grown beyond, some of them fallen by the wayside also. Uh, Simultaneously, we also have an equity fund which is uniquely placed, which is looking at upstream agri startups. So Indian agriculture is ripe for innovation and disruption. And the upstream is a space which is, in our view, under invested. And we're looking at those opportunities right now from the equity side. Also, I think the unique thing about us is that we don't look at everything from an investor lens. So if there are startups who are in an early stage, who require support, who need mentoring, we invest a considerable amount of professional time in supporting early stage businesses beyond just investing. So that is a unique three-way approach that we have towards building the sector.
Thank you, Emmanuel. I'll come back to you for a follow-up question at the cost of the fund. I think our audience would like to know that. I would like to now speak to Agam Khare, who's the CEO and the founder of Absolute Group, so to say. A very cutting-edge technology, biosciences company, which is doing now very meaningful work in supply chain management of the commodities and bringing a new, for want of any better word, a new disruption or a new twist to the traditional supply chain management, which otherwise was known as trading, Artiya Kakam. So Agam has worked very closely with our late President APJ Kalam Saab on a moonshot innovation, what I remember. So a little bit about yourself, about Absolute, and what innovative solutions you're bringing to trading of commodities.
Thanks, Sudhakar. So yeah, of course, I started my career working with Dr. Kalam. I was working on his Vision 2020 program. But fast forward today, Absolute is a biotech company. We have interests in agriculture, healthcare, and biomaterial space. Agriculture is large for us. Agriculture, we do everything from R&D and creating novel biologics molecules to then making biologics farm inputs from crop fertilizers, pesticides to stimulants, all biologics in nature. Then we go to the value chain where we do everything from crop insurance to financing to soil testing and advising growers in different conditions of growing. So very deep value chain engagement with all sorts of growers across the world. And then we also have a business in trades of commodities once they are grown. And that business headquartered out of UAE. What we do there, what we realized, I mean, I was hearing some of the panelists talk about the situation in India and how the market should shape up. I see clearly 2 or 3 areas which will open up the diaspora for India completely. The infrastructure that is being built right now as we speak, I mean the ports that are coming up, I'm aware of some of the ports that are being built. Over the next 3 to 5 years as they come up and take shape, with the available infrastructure, there is going to be suddenly the trade numbers that the country today is sort of dealing in are going to go up. And so anybody building, therefore, tracking it, sort of pulling it towards the back end, the production side will certainly have an advantage. The other is the changing need of the markets. Like today, you are looking at ethanol production, biofuels. And so some of those crops are going to be of extreme importance, and some of them are today, but the nature of those crops are going to change very quickly. So today you might use a crop for biofuel and tomorrow that crop might change. So looking at which are those latent crops and looking at the entire process and then realizing which other crops are today latent in nature which can become large tomorrow, I think there is a massive business potential waiting to be built there. And third is the changing geopolitical diaspora. As somebody was saying that in this environment of becoming more self-sufficient, I think what we more need is regional self-sufficiency rather than individual self-sufficiency of the country, because it looks very beautiful to talk about self-sufficiency of a country, but given the climatic factors and agroclimatic conditions that each country has, there is only so much that you can do unless you can control everything, which does not look likely over the next 5, 7, 10 years. So given that, regional sufficiency will become very important, and therefore when we are looking at commodities, keeping a view of which regions, which commodities, today they may not be happening, but maybe tomorrow those commodities may come up. And so taking a little long-term view on things may create a whole new market that could open up. Also on the trading side, since there are a lot of traders here who are trading commodities, as you start, I mean, so trading for one is we are taking a very short-term view, an year view or a seasonal view. But as soon as you start taking a long-term view, 3 to 5 year view, it's like a stock market. You have two ways to trade. You can take short-term views, you can take a long-term view. But if you take a long-term view, then you start going back to the growers. There is, for instance, some oil. India has scarcity of oil. So what oil can you get in which can be done in India or regionally, which can then create a market throughput here? Those are some of the areas. I think if people start going towards the back end and start linking those need versus what can be built, I think large markets can come out. And that is something that Silk Road, our business, which basically is into commodity trade headquartered in UAE, that business is taking a long-term view on. And so if any of you are interested to talk about it, we'll be very happy to chat about it.
Thank you, Agam. Now I would like to talk to Deepak Pareek, who is a walking, talking encyclopedia from seed to space, soil to oil. So tell us, what is your take on this funding scenario which we are saying? Of course, there's a lot of enthusiasm, there is a lot of froth, a lot of investment has been done. What is your take on this funding? Winter is a wrong word. I think funding, little bit stormy weather, and what do you think, when will it get cleared?
Thank you, Sudhakar bhai. So, actually, luckily, I had opportunity of being an EdTech entrepreneur, 2 successful exit, 1 failure, co-founded a venture capital firm. Now, currently, I like to call myself agriculture economist, because after doing all those things, you do gain some knowledge about the sector. And many of you who have been already trading would have been seeing me on CNBC talking about pulses. So that is also like, part-time activity I do. Now, this is very interesting topic when we talk about like, the funding winter. See, we have to understand, like, as Jinesh rightly pointed out, that actually this is a new sector. In 2012, actually, like, this is where I believe, like, in fact, it was even talked about that EdTech as a sector. And post-COVID, actually, there was a FOMO. Everybody thought, like, if we are not in this sector, we have not invested in this sector. So that's why you find sovereign fund, insurance companies, right, HNIs, everybody wanted to, like, have a pie of it. And that led to, like, sometime you started following the matrices which are not actually, like, helping the sector. And that's why a lot of fund came in, and now people become restless, like when you invest in other typical sectors where we have this mindset of 3-6-9. 3 months a pilot, 6 months test the market, 9 months scale up or close down. No, agriculture, one season itself is 6 months. Now suddenly those investors started becoming like a little bit jittery that actually, hey, have I put the money in the wrong direction or wrong sector? And this is why you see that, like, while there is a funding winter across all the sector, it is more seen in agriculture because, like, the challenges are a little bit more because of variability of the sector. A bad monsoon, like, would have cyclic effect actually on how the investment happens in the grassroots IoT company, which might be just putting sensors actually for irrigation. Now, my take is that, first of all, we are sitting in a country which definitely is having humongous scope in agriculture for a very simple reason. We have made our agriculture very inefficient. Now, whenever there is inefficiency, technology plays a very important role and innovation plays far bigger role, right, in removing those inefficiencies. And this is where I believe, like, India gives a huge opportunity. If we go a little bit broader, I believe India is a part of Asia, and you'll be surprised to know that out of the 7,000 odd startups globally in EdTech, 3,000 of them happens to be India, China, Indonesia, and rest of Asia. So Asia itself is having a humongous opportunity. Even if you go by the funding part of it, we are getting there. Out of $10 billion last year, which were invested in tech companies, definitely lion's share went to US for obvious reason, they are more mature market. But a substantial part of the remaining, in fact, 80% of the remaining money which didn't went to US, actually was invested in China, India, and Indonesia. And this is where I believe, going forward, there is a humongous opportunity. Second, as a startup ecosystem, we focus too much on some of the things which were low-hanging fruit, which is obvious for any young sector. But now we are seeing, for example, Agam is on the panel and he's talking about deep tech, whether it is biotech or digitization. Now suddenly we have started realizing that actually, the unlocking of real potential happens when you invest in deep tech. And suddenly from GMVs, we started looking at it is okay to invest in deep tech companies which actually might not be having revenues for 3 years, 4 years, that is fine. But they are really innovating and they're innovating in a way where they will create a big differentiator going forward. Second, again, the type of companies which are getting funded are those companies actually which are having more focus on GM rather than GMVs. So suddenly the gross margins has become, and Emmanuel would definitely second me, that they have been always looking at show me the GM first, then we'll talk about the GMV. And for example, company like, Star Agri, right, when they started creating that GM, suddenly they see that there is a lot of investor interest, right? 2017, maybe that was not flavor of the town. In 2023, GM is the flavor of town. So I believe, the good companies which either are innovating at, the deep tech part of it, or those companies which have already have substantial size, but now started looking very closely that whether they are able to generate the margins or not, they would get funded. And going forward, I believe, definitely last year was not great. From 1.6, we come to close to 400, 500 odd million. I think 24, 25, and 26 would again see those level of traction. But this time, I believe, all the investors are a little bit smarter, and they'll only put their bet when they are 100% sure.